Welcome to FinCorp 360.
Still confused about bookkeeping? Want to master accounting from scratch? Bookkeeping records transactions. It's daily, while accounting is periodic analysis. Its objective is accurate data for decision. Let me show you the exact step-by-step process professionals use. Bookkeeping is the foundation of accounting. It is the process of recording financial transactions. Every sale, every expense, every payment. If it involves money, it must be recorded. Bookkeeping and accounting are not the same. Bookkeeping records the data. Accounting analyzes and interprets the data. Bookkeeping is the engine. Accounting is the navigation. A bookkeeper records daily transactions.
An accountant prepares financial reports. This report shows our revenue and profit margins. These figures are key. Both roles are essential.
Absolutely, I agree.
But bookkeeping is where it all begins. The objective is simple: to maintain accurate financial records, to track profit and loss, and to understand financial health. Step 1. Choose your bookkeeping method. Step 1. Choose your bookkeeping method. You can use Excel. For beginners, Excel builds strong fundamentals. Software saves time and reduces errors. Next, create your chart of accounts. Assets. Liabilities. Equity. Income and expenses. Open a separate business bank account. Never mix personal and business money. Collect every invoice. Track every receipt. Now comes recording entries. Debit what comes in. Credit what goes out. Follow the double entry system. Journal entries move to ledgers, entries flowing into T accounts. Each account has its own ledger. Next, prepare a trial balance. Debits must equal credits. Now generate the profit and loss statement. Income minus expenses equals profit. Then prepare the balance sheet. Assets equal liabilities plus equity. Cash flow shows real movement of money. Operating, investing, financing activities. Excel builds analytical thinking. You understand every calculation. Bookkeeping opens many career doors. Junior accountant working on laptop screen. Reviewing the report, sales are up 15% from last quarter. However, operating expenses rose by 10%. We need to optimize costs. Finance analysts review the financial analytical reports. Start simple. Be consistent daily. Accuracy beats speed.
Understand, don't memorize.
Bookkeeping is not difficult. It is structured. It is logical. And you can master it. Assets are what a company owns. Liability trial balance ensures debits equal credits. Financial statements provide the final summary.